Hi guys, Thomas here. Today I want to talk about the tax-free saving account. It's one of the Canadians' favorite accounts and is also mine as well. It's a great tool to begin with your investment journey. In the next 5 minutes, I will go through the benefits of having a TFSA and how does it compare to RRSP. If you want to know about investment and taxation, then this video will definitely be useful to you. Oh, if you're new to this channel, my name is Thomascchan, and this channel is to share knowledge, habits, and mentality so we can improve our finances better. If you like my videos, make sure you give me a thumbs up, subscribe, and hit the bell so you won't miss any important information. TFSA was created back in 2009 by the Canadian government, and its purpose is to encourage Canadians to save, or I should say to invest without paying tax on the growth. But how does taxation really impact us? We have two examples. In the first scenario, we have $1 here, and every time we invest and it doubles the return. So from $1 to $2, then again becomes 4, then 8. We do that for 20 rounds. The dollar now becomes $1,048,000. That's the power of compound growth. For the second scenario, we have the dollar and double the return as well. But each time it doubles, the government comes in and take 30% on the growth as tax. Therefore, instead of $2, now becomes $170, then $289. We do that for another 20 rounds. How much do you think it becomes now? The answer is $40,000, which means the difference of that $1 million goes to CRA pockets. And if you choose to not pay in time, you are penalized for a bigger fine or be thrown to jail. Therefore, smart investors always utilize tax shelter accounts for their investment. Once you turn 18 years old, or 19 to some provinces like British Columbia, you can open and contribute $6,000 to the tax-free saving account. The room accumulates and resets every year. Let's say you are 18 years old or even older back in 2009. Today, you can contribute up to $69,500.
Similar to RRSP, there are 4 platforms you can choose to open up a tax-free saving account. There are the banks, insurance companies, investment firms, or the brokerage. And for each account, you have various choices for investments such as saving accounts, term deposit, bonds, ETF, mutual funds, or stocks, all dependent on your goals and the risk of tolerance. The big question is, should I invest at tax-free saving or RRSP first? First, you have to consider if you're in a high or low tax bracket. Next, think about the time horizon that you have this money saved. For RRSP, it is designed for retirement by lowering the income tax, where the tax-free saving is like for everything else in your life. If there's a withdrawal from the TFSA, the contribution rule resets at January 1st of the following year. But for RRSP, once it's withdrawn, the contribution room does not increase back. Generally speaking, TFSA is simple and very effective tax shelter account, but it's not perfect. First, the contribution room is $6,000 per year now. To some people, the room is not enough to shelter for a large transaction such as inheritance or home sell-off. Second, you have foreign equities, say a US blue chip ETF or stocks that generate dividend. The US Tax Bureau will charge a 15% withholding tax. Vice versa, RRSP can do that completely tax shelter. Lastly, tax-free saving is now recognized by the US government. They will consider tax-free saving as a foreign income. For US tax resident who has a tax-free saving in Canada may result in tons of paperwork and more tax need to be paid. That's pretty much the breakdown for the tax-free saving. Do you like this account? And usually, what kind of investment do you do with this account? Comment below. As always, thank you so much for watching, and I will see you in my next video.